Hello everyone. I hope you are having a good day, and my name is Tarun Kumar Madan, and I welcome you to today's session on charitable and religious trust amendments by the Finance Act 23 and the recent Supreme Court rulings. So friends, over the past few years, this topic has consistently seen a lot of amendments in the recent budgets, and we have witnessed the amendments made during the Finance Acts in the recent past. And even there are certain Supreme Court rulings, I think, which require attention of all the charitable trusts and NGOs. For today's session, I do have two renowned speakers with me, Advocate Dr. Manoj Fogla and Suresh Kejriwal sir. I welcome both of them. So before we dive deep into today's discussion, so our discussion is also captured in the book which we have recently authored. It is Trust and NGOs Ready Reckoner, 4th edition, which is amended by the Finance Act 23 and also captures the impact of the Supreme Court rulings. So for today's session, our discussion is divided into 3 parts. In the first part, I'll be capturing the amendments made by the Finance Act 23 and the key issues involved in the amendments. In the second part, we will be discussing the impact of Supreme Court ruling on Ahmedabad Urban Development Authority. In the part 3, we will be covering the impact of Supreme Court ruling in the case of New Noble Educational Society. So before we start our today's discussion, I invite Dr. Fogla sir to share his initial remarks.
Thank you, Tarun. Good afternoon, good evening, everybody. So now today, as Tarun has already said, we have an extensive list for discussion. So we will be discussing 2 Supreme Court judgments and the amendments. And ever since 2020 Finance Act, there has been radical changes as far as the registration related provisions are concerned. And registration related, and along with the provisions pertaining to applications, inter-charity donation, corpus, application out of loan, application out of corpus. So there have been so many amendments in the recent past which have a direct impact on particularly the work of the chartered accountant and the finance persons. So how the disclosures will be made, how applications will be claimed, how deficits will be claimed in future, how unutilized balance will be treated. So many things have happened in the recent past, and over and above that, we have changes in this Form 10 and 10BB. The audit report is totally overhauled. The ITR 7 is totally overhauled. So today probably we will not be taking this audit report and ITR 7, but to build the context and the background to the audited statements, audit report, ITR 7, it is important that we understand the nitty-gritties and the practical issues in various amendments which have happened, particularly 2023, many amendments with far-reaching compliance and procedural implications, which have so many nuances. So today we have decided to take up these amendments and the fundamentals, though the Supreme Court judgments are too elaborate. So we will try to discuss the key takeaways to the extent possible, and particularly whether amendments or key judgments, if you have some issues, you put it in the chat box beforehand, so that in a very structured manner we will try to address it during this session, because the time will be an issue as we go along. So I think there are so many things, so I don't want to build a context to it in terms of this, better to methodically understand what has happened in terms of amendment in 2023. So I request Tarun to come forward and explain the amendments, and in between Suresh ji in particular and we will also take up the key issues in between. Tarun.
Thank you, sir, for your insights. So friends, In the part one, we will be starting with the amendments made by the Finance Act 23, which has an impact on the charitable sector. So broadly, there are 9 amendments, and we can classify these 9 amendments into 3 categories. So first category belongs to the amendments which has an impact on the registration of the charitable sector. As Manoj sir has recently said, there are a lot of amendments on the registration related part of the charity sector since the Union Budget 2020. And second category belongs to the amount of application, and it becomes very important to correctly compute the amount of application since there is a complete overhaul change in the Form ITS 7 and Form 10B and 10BB, and application has to be correctly computed, and additional responsibilities has been cast upon the auditor to certify the Form 10B and 10BB. And there are certain other amendments which are also very important, and they are resulting into the change of time limits to file the Form 9A and Form 10, which are used for the accumulation of income. And there is change in time limit to file the return of income. And there are some few other amendments which we'll be discussing. So broadly, there are 9 amendments which are part of our discussion in the part 1. So first amendment is on the registration and approval category. So before I start the amendments on the registration and approval category, I'll give you a brief overview that what is the process of registration of charitable institutions under the Income Tax Act, so that you can in a better way understand the amendments. So in the Union Budget 2020, there was a complete overhaul change in the scheme of registration, and the new registration scheme was made effective from the 1st of April 21. So earlier there was used to be a perpetuity of registration, and after the amendments, the registration was made for a particular period of time. There are broadly 2 categories of registration after those amendments. First one is provisional registration and other one is regular registration. So provisional registration is granted for a period of 3 years if you don't start your activities. For practical purposes, it is only for 6 months if you have started your activities. And regular registration is valid for a period of 5 years. And at the same time, it is very important to understand that registration is a mandatory precondition to avail of the exemptions. And at the same time, only having a registration does not entitle you to get all the exemptions. You have to satisfy the other conditions which are mentioned in the Act. So now we'll start with the registration related amendments. So first one is registration or approval based on the commencement of activities. So as I told, there was numerous amendments in the registration related portion in the recent past. So one of the amendment was that if a new trust wants to start get itself registered, it has to first get itself provisionally registered. Then that provisional registration has to be converted into regular registration after the commencement of activities. So there is 2-step registration process for NGOs after the amendments. First get provisional registration, then get the provisional registration converted into the regular registration. So what was the pre-amendment position before the amendment by the Finance Act 23? The new registration scheme provides that trust or institution applying for the first time registration must make the application in 2 stages. In the first stage, the application has to be filed for provisional registration, and this application has to be filed at least 1 month before the commencement of the previous year, relevant to the assessment year from which the registration is sought. And in the second stage, this provisional registration has to be converted into regular registration after the commencement of activities. So for practical purposes, this provisional registration was useless for those NGOs which are applying after the commencement of activities. So it was a difficulty for those NGOs because they need to apply for 2 registrations simultaneously. Once they get provisional registration, at the same time, they have to file an application for the regular registration because they have already commenced their activities. So now the Finance Act 23 has addressed this issue, and they have made 2 categories of the registration, and the provisional registration will be only for those NGOs which have not commenced their activities. If the NGOs have commenced the activities, they need not to apply for the provisional registration, and they can file an application directly for the regular registration. And this amendment is effective from 1st of October 23. So with effect from 1st of October 23, only those trusts and institutions shall file an application for provisional registration that has not commenced its activities. So the trust or institution need not apply for provisional registration if the activities have commenced. And if the activities have commenced, these NGOs can directly file an application for the regular registration. But there are two conditions. Condition one is commencement of activities, that activities have already been commenced. And condition two is no exemption has been claimed under section 1023C or 1112 in the past years. So condition two is no income or part thereof of the said trust or institution has been excluded from the total income of the trust on account of applicability of section 1023C. So these all are approval based categories, IV, V, VI and VIA, or section 11 or 12 for the year ending on or before the date of such application at any time after the commencement of activities. So now it becomes very important to determine what constitutes commencement of activities, since the category of application will depend on the factor that whether the activities of that particular trust has commenced or not. Now there could be multiple events. The first step in the stage of formation, when your trust is registered or a society is formed or a section 8 company is incorporated. So whether that particular event will be said to be as a commencement of activity, or when an organization starts its fundraising activity, that would constitute as commencement of activity. Or third event could be whether when the organization starts applying its income towards charitable objectives, whether that will constitute as a commencement of activity. That event becomes very important to determine. The reason is, if you don't apply within a specified time, you will also be subject to accreted tax. So this is very important to determine the commencement of activity. So I'll invite Manu sir's views. Sir, what will constitute the commencement of activities?
My voice is clear?
Yes, sir, you are audible.
Okay. So Manish, can I take this query? Because my video is not working, but I think my voice is clear.
So this commencement of activity, what we understand is that it should be the date from which the NGO makes application of fund. So कुछ पैसे खर्च होंगे, anything which will be claimed as application under section 11(1)(a), the date of that event should be treated as commencement of activities. The confusion was that whether receipt of donation could be treated as commencement of activities. In our considered view, we don't think that receipt of donation or a grant, because a trust sometimes or a section 8 company begins with the share capital or the corpus grant. So the date of registration itself becomes commencement of activity if we take that as explanation. So that is what we should take.
So to summarize it, the date at which the trust starts applying its proceeds towards its objectives, that is, even when a single penny is spent towards objectives, that should be considered as the point of commencement of activities. And based on that event, you should see whether you need to apply for the provisional registration or directly for the regular registration. And that event will also be very important, because provisional registration has to be converted into regular registration for those trusts which has not commenced its activities. And that event of conversion is dependent on the fact whether the activities have commenced or not. Sir, the second very important key issue here is, in the case of direct regular registration, where the activities have been commenced, they have imposed a condition that in the past years, there should not be any exclusion of the income on account of approval under section 1023C or section 1112. Now, it could be possible that in the past, a trust could be having the registration under section 12AB or 1023C, and that registration or approval had been cancelled. Now, what will be the fate of these institutions, whether these institutions can apply for the registration or approval in the future?
And this, it seems, has created a deadlock, because these institutions are going to face problem, because anybody who has at any time in the past claimed exemption under 1023C or 12A comes under the ineligible category. Sureshji, your comments?
You're right, because the amendment was made in such a way that the intention was that they want to avoid this double submission of form for the organization who have already started their activity. But the way amendment has been made, they have also excluded those organizations which in the past have claimed exemption benefit. So from 1st October 23, I think once the organization's registration has been cancelled, they have taken benefit in the past. So there will be no window for them to apply again. And it is to be seen whether they can apply now, because this window is going to be left from 1/10/23. But in some of the cases, when the after 10AB form, when the provisional registration was not renewed to a permanent regular registration, in those cases also the window is not allowing you to file for a provisional registration. So let us wait and watch whether once the provisional registration is not converted into regular registration, whether still we can file for new registration up to October 23 or not. But after October 23, certainly not.
So this amendment is effective from 1st of October 23. So those organizations whose registration was cancelled anytime in the past have a chance to apply for a registration by 1st of October, but there is a practical difficulty that portal is not allowing you to submit the application. Hopefully this issue would be addressed by the CBDT in the coming years, coming months, or coming few days, I would say. So that has to be seen whether such organization can apply by 1st of October or not. Now, second amendment, which is again a registration related, that is impact of giving incomplete, false or inaccurate information in the registration application. So what was the pre-amended position regarding the cancellation of registration? So once a registration is granted, it is valid until it is cancelled. So cancellation provisions under the Income Tax Act are contained in section 12AB4 and 12AB5. And cancellation proceedings can be initiated by the Principal Commissioner of Income Tax or Commissioner of Income Tax if it has noticed the occurrence of specified violation, and that specified violation need not to be noticed only during the assessment proceedings. So if the registration has been obtained by giving the incomplete or false information or incorrect information, the Commissioner has power to cancel the registration after giving an opportunity of being heard. But that power was given under the Rule 17A. And there was no explicit provision in the section itself that will allow you to cancel the registration, that will allow the Commissioner to cancel the registration. Now the Finance Act 23 has inserted a clause G in explanation to section 12AB4. That clause has given explicit power to the commissioners to cancel the registration where the application filed is not complete or it contains false or incorrect information. Now, there are two very important points. If the application is filed in Form 10A, the registration is automatic. But if once the application is filed for registration in Form 10AB, that has to be gone through the scrutiny test of the Commissioner. We received a lot of questionnaires which we need to reply, and Commissioner verifies the documents and books of accounts of the trust. Even in those cases, since the application would have already been passed the scrutiny test of the Commissioner, whether this power to cancel the registration at a later date is justifiable or not, that has to be seen. Further, the consequences of cancellation are very harsh. So this power should be used in a reasonable manner and after giving a proper opportunity of being heard, because once a registration is cancelled, it will be a deadlock situation, since we have seen that after the 1st of October 23, if your registration has been cancelled anytime in the past, you will not be able to get the benefit of exemption anytime in the future. So these powers should be used after following the principles of natural justice. And particularly in a bona fide errors, these powers should not be exercised by the Commissioner where the mistakes were rectifiable, and the opportunity of being heard should be given to an NGO so that mistakes can be rectified and registration can be continued. Now, third amendment, consequences of non-filing of application for re-registration or reapproval or renewal of registration or approval. Now, the registration is not for a perpetual period, but it is valid for a limited period of 5 years or 3 years, depending upon the category of registration which an institution is holding. The Finance Act 23 has introduced an amendment in section 115 TD, which levies the equity tax. So now the trust or institution registered under section 12AB or approved under section 1023C shall be deemed to have been converted into any form not eligible for registration or approval in the previous year if it fails to make an application for re-registration or reapproval, or it fails to make an application to convert provisional registration to regular registration or approval, or it fails to make an application to get renewal of registration or approval after the 5 years period of registration. Now, in such cases, the conversion date shall mean the last date for making an application for registration or approval, and these institutions will be subject to accreted tax. Now, since the new registration scheme was effective from the 1st of April 21, and all those institutions which were earlier granted a registration under section 12A or 12AA, that registration was for a perpetual period. They were given an option to continue their registration by filing an application in Form 10A. And the date of filing an application was extended to 25th of November 22. Now, what shall be the implication on the trust if they had failed to file an application for re-registration by the 25th November 22?
Thank you, Tarun. In all such cases where the organization was previously registered under section 12A and they failed to apply for fresh registration under section 12AB, and the last date of 25/11/2022 has also been expired, then as per the pre-amended 23 position, those organizations becomes a non-registered organization. That means their income were subject to 5 years of income. They were not subject to ETG approval benefit, and that's why they are treated as a normal organization. But again, after this amendment by Finance Act 23, they were again exposed to one more additional implication, and that is the implication of exit tax. Now, the amendment says, in case we are failed to apply in such cases, then that organization shall also be subject to exit tax directly. In such cases, they are not going to apply for a cancellation provision. This event itself will be treated as a specified violation for the purpose of exit tax, and these organizations will also be subject to exit tax. And for such default, the last date of the submission of application, that is 25/11/22, shall be the date of default. And based upon that date, your fair market value of the asset shall be calculated, and you shall be subject to exit tax. So after the amendment, the more consequences for a default which you have already committed.
Sir, and in such cases, since the 25th November 22 is the date of default, and the payment of accreted tax will apply the 14 days from the end of the year in which the default has occurred. So all these institutions and NGOs were subject to payment of accreted tax by the 14th of April 23, since this law is effective from the 1st of April, right, sir?
Yeah. Technically, this is the position. But practically, just we see how it works. Because no NGO is aware of these facts. The 14th April has already been gone.
Right. Sir, what shall be the implication if these trusts, which were not re-registered before the 31st March 22, but got the provisional registration later? The reason being is because earlier the date was to get the re-registration was 31st of March 22. But somewhere in the month of October, they came up with a notification to extend the date to 25th of November 22. But most of the NGOs which missed the deadline, they had applied for the provisional registration category. Now, whether these NGOs will also be subject to the exit tax?
I think as per the present provision, if you go with the literal interpretation of the law, then those NGOs who has not applied for a fresh registration in terms of provision 1, 12AC1, and then the default still continues, though they have applied for a provisional registration, got the registration, but their earlier default still continues. So though from the financial year 22-23, they may be a registered organization for the purpose of income tax assessment for that particular assessment year. But the newly amended section, which for 115 TD, I think as per the literal interpretation, they will also subject to that default. But again, this will be go in litigation because the change in the law imposing penalties have created after the default has been committed. At that time, there was no such implication. So this will be a matter of litigation, but prima facie, literal interpretation, they may be subject to exit tax as well.
Now, sir, if they had missed the deadline to apply the 25th November 22, can they apply for the fresh registration as of now?
I think up to October 1st October 23, this window is not open, not closed. So I think they should apply for a provisional registration. And if they're getting the provisional registration, then they have a fit case to fight for non-levy of exit tax. But those two implications are different. But once the organization is granted registration before their registration exit tax is imposed, then they can have some argument not to levy the exit tax, but they can apply up to 30th September as per the present provision of the law.
So now we are moving to the next amendment, withdrawal of retrospective benefit of exemption under section 1112. So friends, as of today, there are mainly two schemes of registration or approval to grant the exemption to the income of the NGO. First one is section 1023C and the other one is section 1112. And in the section 1112, particularly, we have an edge over section 1023C because of the retrospective benefit of exemption. And what was that benefit? The exemption under section 11 and 12 was available for the assessment year for which the assessment proceedings are pending before the assessing officer as on the date of such registration, and the assessing officer was not allowed to take any action for reopening of an assessment for any assessment proceeding the first assessment year for which the registration applies. Merely for the registration, trust or institution has not obtained the registration. So in a way, that was a retrospective benefit of exemption under section 11 and 12. Now this exemption benefit has been taken away by the Finance Act 23 since it has omitted the second, third and fourth proviso to section 12A2. Now the benefit of exemption under section 11 and 12 shall not be available for the earlier years. So now we need to understand what will be the hardships to NGOs after the omission of these.
Tarun, what I understand, this may have its two implications, very, very vital implications. We always encourage NGOs who have already started their activities and have raised funds and they have not registered. We encourage them to register under income tax and regularize their returns on a strength of this proviso, because this proviso allows those organizations to take the benefit of registration even for the back pending assessment years. So those organizations which are yet to be registered but have a past transactions, they will be discouraged to come forward and register because this may have tax implication for back years. And the second implication, what I understand, because this deletion of the proviso is not without any saving clause. So just all of a sudden from 1/4/23, this proviso is not there. But now there are certain registration of which already been granted during the financial year 22-23 on a provision of the law which allows them to take the back year's benefit. But when the assessing officer is going to give them the benefit, that proviso is not there. That is deleted from the statute book without the saving clause. So again, this may create litigation for the organization which have already been registered and when they are going to claim the proviso benefit. So these two implications I see for these changes.
Thank you, sir. Now we are moving to the part B, that is restriction on the amount of applications. The first amendment is restriction on the inter-charity donations. So it was a very well settled law that inter-charity donations other than corpus is treated at par with the direct application for the purpose of section 11, and that was completely allowed as application of income to the NGOs. Now the Finance Act 23 has imposed restriction on the inter-charity donations. It says that only 85% of the eligible donations made by trust or institution registered under section 12AB to the trust or institution registered under section 12AB or approved under section 1023C shall be treated as an application of income. Now if a NGO makes a donation of 100 rupees to a B NGO, only 85 rupees will be considered as an application of income and 15% is in the nature of disallowance. Now, Finance Act 23 has also imposed restriction on the application out of corpus and loans and borrowings. What was the pre-amended position? It was application out of corpus, donations or loans and borrowings are not considered as an application for charitable or religious purposes in the year of application. However, when such corpus donations are invested or deposited back, or loans or borrowings are repaid, such amount shall be allowed as an application in the previous year in which it is deposited back to the corpus or to the extent of such deposit or investment. Now, what is amendment? It says application out of corpus or loans and borrowings before 1st of April 21 are not allowed. So if there was any application before the 1st of April 21 and that corpus is restored as of today, it will not be considered as an application of income. And further, it has imposed a cap on the time limit of 5 years to restore the corpus or repayment of loan. So if you fail to restore the corpus within the 5 years period from the year of application, it will not be allowed as an application of income. And third one is amount of application out of corpus or loans only to the extent of eligible applications of the concerned year shall be allowed. So it has imposed conditions subject to which that corpus or loans will be considered as an application of income. And here are these conditions to claim the application of income. The such application should not be in the form of corpus donation to other trusts, because what are these conditions? These conditions are also not allowed as an application of income in the case of normal circumstances. So similar conditions are also imposed if an application was made out of corpus or loans. If you have not deducted the TDS while making the application out of corpus or loans, if you had made the payments in cash, carry forward and set off of excess application is not allowed. Application is allowed in the year of payment, since in the Finance Act 21 they had imposed a condition that application of income shall be allowed on the payment basis. It should not be towards the direct or indirect benefit to the specified persons. The application should be in India and not outside India. Now we have discussed about the restriction on the inter-charity donations. It has imposed that only 85% of the eligible application will be allowable. Now the question comes whether donation to the unregistered trust will also be subject to this amendment.
Thank you, Tarun. Normally, when donation is made to an unregistered trust means we are meaning the organization is registered in the line of a charitable organization, but those organizations are not registered in Section 12AB. Okay. So, as per the present case laws, these donation to unregistered trusts were allowed. However, the application was never in doubt. Application for charitable purpose can be established. But as per the present framework of 10BB report or ITR, where they are saying amount disallowed will include donation to a trust or organization which is not approved or not registered in Section 12AB. That means the operational framework of the income tax presupposes that the donation can be made only to a registered organization under 12AB or to approved organizations. And if we go by that logic, then donation to unregistered trust may not be allowed as an application of income as per the operational framework. But as per the legal framework, as per the law, judicial pronouncements available on this, there are certain judicial pronouncements which says if the application is made through an unregistered trust, but which is charitable in nature, and the application can be established through expense voucher, then those expenses should be allowed. But now we have to see because of this operational framework change in the ITR and the 10B form.
So, sir, to summarize it, we can say that if a donation is made to the registered trust, only the 15% will be disallowed. If donation is made to the unregistered trust, the 100% of amount will be disallowed.
100% will be disallowed. Yeah.
Sir, in the recent days, we have seen a structuring of the NGOs where there is a corporate foundation or a mother NGO, and it grants, sub-grants the amounts to a various smaller NGOs to run their operations. Now, since only the 85% of the inter-charity donations are allowed, so what will be the impact of this restriction on the structure of mother NGO and the mother-child NGO structure?
Actually, if the mother NGOs receives only donations which has to be passed on to other NGOs, then that means out of 100 rupees, they are passing on to 100 rupees to other NGOs. But in those cases, their application shall be deemed to be only rupees 85. That means, but for the purpose, because of the statutory accumulation benefit, they will not be subject to tax because 85 will be deemed application, 85%, and the 15% statutory accumulation will save them for paying any tax. But at the same time, if those organizations having some income unrestricted income which they want to accumulate for future years, those organizations will not be accumulate those income because their statutory accumulation limit has already been exhausted because of this disallowances, deeming disallowances. And therefore, for those organizations, for other incomes, either they have to pay tax because if they have income, because this statutory accumulation limit has exhausted, or they will not be able to accumulate the fund.
Yeah, here I must add, there is a confusion that if a mother NGO gives, say, 1 crore rupees of grant to another NGO, the application will be restricted to 85 lakh rupees, 85%. So there is a confusion that whether that 15 lakh rupees will be taxed, because the argument is that 15 lakh rupees cannot be accumulated because it is not actually available. Because to accumulate 15% accumulation, you need actual funds to be accumulated, so those funds are not available. But our understanding is that the statute has brought this restriction only to curb the accumulation of other income under the limit available under inter-charity donation. Our understanding, there will be no tax implication on the 15%. And accumulation, it is a deemed accumulation, that 15% accumulation benefit has been denied because 15% has been given to another organization, only 85% has been treated as applied. That means 15% accumulation benefit has been denied. So it is a kind of a nullifying activity. There will be no tax implications. The amount will be treated as 85% applied in terms of the income tax application purposes. In reality, it will be 100% cash outflow, and other income will also be subject to 85%. Where the advantage was that suppose an organization has an income of 1 crore 20 lakh rupees and it has given 1 crore rupees as inter-charity donation. So because it has given 1 crore as inter-charity donation, it need not spend 15 lakh rupees out of the remaining 20 lakh rupees income. So to curb those kind of practices, only this amendment has come. It will have no other tax implications.
Now we are moving to the next part of amendments, that is other amendments or residuary amendments. First one is preponement of the time limit to file Form 9A and Form 10. So both these forms are used for the accumulation of income by the trusts or NGOs. So if there is any shortfall in the application of income, the trust or NGOs have an option to file Form 9A or Form 10. So the Finance Act 23 has preponed the due date to file the Form 9A or Form 10 by the 2 months. So for example, if the due date to file the ITR is 31st of October for the audit cases, then the Form 9A or Form 10 in such cases has to be filed by 31st of August. So sir, what will be the impact of change in the time limit to file the Form 9A and Form 10?
The direct impact would be, now we have to submit 9A and Form 10, which we earlier submitting up to the due date of filing, that is by October. Now we have to submit by August, not even by September when the accounts are finalized and audit report is given. So basically now every organization has to prepone their finalization of account. Otherwise, they will not be in a position to understand what is the shortfall and the reason for that shortfall. So the direct impact of this change in the time limit is all the organizations now need to finalize their accounts well in the month of August, not even September when the audits are being finalized.
Okay, so there are now 3 due dates. First one is to submit the income tax return, which is 31st of October. Then comes the due date to submit the audit report in Form 10B and 10BB, which is 1 month prior to submission of the ITR, that is 30th of September. Then there is due date to submit the Form 9A and Form 10, which is 2 months prior to the due date of submission of ITR, which comes out to be 31st of August. So Form 9A and Form 10 has to be filed by 31st August. Audit report in Form 10B, 10BB has to be filed by 30th September, and ITR has to be filed by 31st October. Yeah. So practical purposes, for all practical purposes, Yes, there are 3 dates. For practical purposes, your accounts, ITR and audit has to be closed by 31st August, because only then you will be in a position to know whether you have to accumulate some amount or not.
So theoretically, there are 3 dates, but practically you are getting 1 date. By August,
So
you have to
practically,
finalize.
it is 31st of August due date for the NGOs now. Now, updated return without benefit of exemption. So in the budget 23, they have clarified that the ITR can only be submitted by the due date to submit the original return of income or the belated return of income. So it can only be filed by the 31st of October or the 31st of December to claim the exemption. Now, what will be the consequences if I miss the deadline to submit the ITR by the 31st of October or the 31st of December? Whether the NGO can file the updated return or not, because it has been amended that the exemption shall be available only if the return of income is filed within the time allowed to submit the original return of income under section 139(1) or the belated return of income under section 139(4). And the updated return of income submitted under section 139(8)(a) shall not fulfill the conditions to claim the exemption. So as a result, the benefit of exemption cannot be claimed by filing an updated return of income. So now, whether the NGO can submit it an updated return of income or not, if it can submit, how the income will be computed in such cases?
Tarun, though the intent of this amendment was that the updated return shall not be subject to an exemption benefit, and that's why they amended the condition to submit the ITR timeline. But the timeline to submit the return has been changed and is mentioned 139(1) and 139(4)(a) 4. And this updated return we are submitting in section 139(8)(a). And now section 13(10) and 11 has also been inserted effective from assessment year 23-24. And this section says that whenever there is a non-compliance of the conditions, and one of the non-compliance is not complying with the timeline to maintain to submit the return. So when you are submitting an updated return, that means you are filing return after the 139(1) and 139(4) time limit. That means you have not complied with the timeline of that condition. In such cases, your income shall be computed under section 139(10) and 139(11). And this 1311 is a special scheme for company which allows all the revenue expenses to be considered while deducting from the income. It doesn't consider capital expenses. At the same time, it doesn't consider intercity donation. It also doesn't allow all the disallowances like cash payment, non-tedious cases. So basically, technically, you are allowed only the revenue expenses without any intercity and capital expenses, without any benefit of statutory accumulations. So once we are filing the updated return, be sure that you shall be allowed only the revenue expenses as an application of income, not other expenses.
So to summarize it, if you fail to submit an ITR by the original due date or belated due date to submit the income tax return, you will not be eligible to claim the benefit of exemption under section 11 and 12. However, you can submit the updated return of income. Your registration status will not be lost. Only there is a special provisions for computing the income, which are given under section 13, subsection 10 and 13, subsection 11. By following those provisions, you have to compute the income, and that income has to be reported in the updated return of income.
Yes.
Now the last amendment, impact of registration under section 1112 or approval notification under 1023C, 1023EC, 1046 or 46A. So if an entity is registered under section 12AA or 12AB, it is entitled to claim an exemption under section 1023EC and 46A of the Income Tax Act. But the registration granted to it becomes an inoperative. So once you are notified or approved under section 1023EC or 1046A, the registration under section 12AB will become inoperative. So the trust or institution whose registration has become inoperative under the first proviso may apply to get its registration again operative under section 12AB. But on doing so, your notification under 1023EC or 1046A shall cease to have an effect from the date your registration becomes operative. So at one point of time, you can only hold the approval under section 1023EC or 1046A or the registration benefit under section 12AB. Now we'll take up your queries which are related to the amendment portion before we move to the part 2. If you have any queries related to the amendments made by the Finance Act 23, I'll take that up. From where to download the PPT. So PPT and recording link will be shared to all the participants by the Taxmann team. Second question is, what should be considered as the date of commencement of activities of trust, whether it should be the date on which the first donation is received or the first expense is incurred. So we have already cleared it. So our understanding is that the date at which the first application amount is made, that will be considered as the date of application, commencement of activities. A trust is registered under section 12A, has added an object in the object clause, whether the addition will be termed as change in the object clause, not confirming the conditions of the registration already granted, and it will require the registration under provisions of section 12A1 ACV. So sir, the question is, if there is a change in the object clause, whether they need to re-register.
The language of the section is slightly confusing because the section says that the change of the object clause which does not confirm. So technically, if you make a literal interpretation of the language, it seems that it should not be necessary. But our understanding is that if there is any change in the object clause, you should apply for registration, because object clause is quite fundamental to the limb under which you fall, and if there is any variation, so that is a kind of an error in the act, but the intent of the statute is that it should apply.
So another question is, old trust which were granted 3 years provisional registration, whether in cases those trust also there is final registration required? Yes, if you are granted provisional registration, you need to convert it into the regular registration. So there is time limit. You have to convert it into the regular registration within 6 months of commencement of activities, or 6 months prior to the expiry period of 3 years, whichever is earlier. Application of money out of corpus fund is allowed or not?
We briefly touched upon application out of corpus is not treated as application in the year which it is made, and the only income out of application is what is allowed in the new scheme of taxation and computation of income and application. But application of corpus should be separately disclosed, and in future replenishment of the investment would be allowed against future years' income.
And after this amendment of Finance Act 23, if any expenditure is made out of corpus before 21, then that replenishment will not be considered as application, because up to 21 all loan and corpus applications have been debarred.
If fixed deposits are made on 30th March for a period of 15 days or 3 months, whether it will be treated as application of income?
But fixed deposit is not treated as application of income, except in case of section 11(1)(a), in case of capital gain, and there also the tenure should be more than 6 months.
Are research organization in charitable trust and need to be registered under section 12AB?
Again,
Research organizations are eligible to claim benefit of section 11 and 12 or not?
yes, research activity, provided it is without profit motive, can be considered as a part of charitable activity.
Due to technical reasons, Form 10BB could not be filed, and the reason of non-filing was informed to the department, but department did not consider the contention. What is the remedy?
The 10BB audit report.
Yes, sir.
In such cases, we have a circulars from the CBDT giving power to the CIT exemption. So I think they have to make a formal, just not implementing, they have to make an application for continuation of delay, citing those circulars, giving some reasonable ground for such delay. And I think when a formal application is made based upon that circular and giving the reasonable ground, I think then those applications should be considered by the CIT exemption, denoting such delay. And once the delay is condoned, then we can file 154 petition to get the demand vacated.
Sir, could you please explain how will 15% non-application be disclosed in ITR If we do not, then there will be difference between amount accumulated in Form 10 and in ITR.
Problem, because this 15% disallowances, money is already spent, 100% we have spent out of India charity donation. And just for purpose of reducing we are taking the statutory benefit, statutory accommodation benefit. So technically there is no fund in the asset side. But now the income tax balance sheet says this 15% accommodation which you are taking, it will be in the liability side. So they result in a situation where the liability side will be statutory accommodation 15%, but this is not represented by any asset because 100% has been spent. So let us see and wait how the department is solving this issue. But technically, as per the present reporting requirement in ITR, this will be some mismatch.
Can a trust pay rent to the relative of a trustee by deducting TDS?
There is no bar in paying rent or any other reasonable payment to relatives or interested parties, but the trust has to establish that it is an arm's length transaction and the rent paid is comparable to the market value or less than it. There are so many cases, and there are at least 2 landmark Supreme Court cases where rent to relatives have been upheld to be a legitimate application.
Author of trust had assigned his share of profit loss in a firm. Now the said firm is running in a loss. Whether trust can treat loss figure as application of income, with this the trust is running in loss.
No, the trust cannot account for losses, because if some assignment has been made, the trust is not a party to legally not obliged to pay losses. So only what income which is actually available for application income. So the trust cannot pass a notional entry of a non-existing income and treat it as application. So only if the trust actually receives the share of profit in future, then only the accounting would be, irrespective of the assignment, it will have, the losses will have no bearing in the books of account of the trust.
So if a trust takes 12AB registration in the month of October 22, that was allowable till 25th of November, and it had been granted registration. So will the omitted proviso, that is section 12A2 proviso which are omitted, will be available if the 147 proceedings were initiated in July 22 and ongoing till now?
It is a case of provisional registration or?
No, sir, it is a case of re-registration. It was registered in October 18 and got re-registered before the 25th of November 22.
As we said, even though the proviso does not stand in the statute book, but if the reassessment happens, to our understanding, the AO should rely on the law as it stood and was applicable for that particular year, and the organization should get benefit of it.
Sir, a trust was provisionally registered and it applied for regular registration, but it had not applied to the questionnaire of the CIT exemption, and the application of conversion has been rejected. Now, how to apply for this trust, as under clause 3, it is not accepting the application?
No, if the conversion of the provisional to
Regular.
Regular registration has been rejected, so the organization can challenge that rejection order.
But they have not been cooperative and they have not replied to the queries of questionnaires being raised by the CIT exemption.
So once they have lost that window, then I don't think they can claim as a matter of right a regular registration. It has to be seen whether they can again apply for provisional registration. Sureshji?
Yeah, actually they have to make out a case why they could not submit the queries reply. And if there is reasonable ground for non-submission, then I think they can go for a tribunal to set aside the case. Because they were prevented by reasonable ground or reasons to supply the requested document. And in such cases, tribunal may set aside the case. But if that is not the case, then I think their registration has not been granted and they have to They have no other window. They can apply again for the provisional registration, provided the window allows up to September.
And
But
further,
practically,
they will also be subject to the exit tax.
exit tax, yeah. Now, in these cases, may not be exit tax because they have applied in time. If the CIT exemption also cancels the registration, not only refusing to register, but also cancels, then the exit tax liability comes.
Can income tax payment be treated as application of income?
Tax payment, it has been held in the past. If it has been actually defrayed, then it should be treated as application. But sometimes question happens that whether penal taxes can be treated as income. So the general rule is that if penalties are being paid for delinquency of the board member, etc., so that is where the question mark may arise. Otherwise, normal tax payment under any type of tax payment can also be claimed as valid application. Surajji, you want to add something?
Yeah. Actually, there are conflicting judgments on this. In some of the judgments, they are saying it should be charged against income. That is income available for application. In some of the judgments, they are saying it is application of income. So the judicial pronouncement is also not very clear, but it is very clear in most of the cases, this is directed either as a charge against income to arrive at a figure for subject to 85% application or as a part of application.
Sir, an educational institution which was already running its activities for 2 years, it applied on 29th of March 21 and was granted registration effective from assessment year 21. So later it obtained registration under 1023C IV from 7th of April 22, which was provisional registration for 3 years. Now when it can apply for final registration?
This provisional registration, which date?
7th April 22.
7th April 22, then within 6 months it should have applied.
It has already missed the deadline of 6 months now.
Yeah.
Registration was granted for 5 years in Form 10AC, even though it should have been for 3 years as it's a new trust. Permanent registration for the same was rejected on the ground that 5 years registration is granted. What should be done?
It is not clear. 5 years is the permanent of the current time. So there is no permanent registration other than 5 years.
Actually, I understand the queries want to raise an issue. They were not eligible for 5-year registration. They were supposed to make a provisional registration, but by default they take another section code and they get a 5-year registration. I think this is a mistake apparent from record, or this is incorrect information at the time of submitting the data or application. So in such cases, they can apply for 154 application to rectify the mistake, to converting their registration from provisional normal registration for 5 years to 3 years, and then to apply 10AB. I think we should start for the.
Yes, sir. The remaining queries we can take towards the end of the session. We should start with the part 2.
So I'm sharing the part 2 presentation paper.
Yes.
Is it clear, Tarun?
Yes, sir.
Tarun,
It is clear. It is visible, sir.
Okay. So I am taking up this part 2 of this session, and this part 2 is basically we shall deal in the very important ruling in Ahmedabad Urban Development Authority. And in part 3, we'll take up this Noble Education Society case. So before we proceed to the Ahmedabad Urban Development Authority case, let us discuss what I'm going to present during this 10-15 minutes. The present provision and implication of violation of Section 215. We must analyze what Section 215 says for GPU activity and what shall be the implication if we are violating Section 215. Then we will analyze the Supreme Court judgment and will summary the key takeaways from this judgment and the key implication. And when we say key implication, it will include the implication on the incidental business activity, the implication on independent business to feed charity, and the implication on charitable activities which are run on commercial lines, and the implication on business held under trust under section 11.4. So we will first analyze the section 215 proviso and its implication if there is a violation to section 215. So we know 215 defines the charitable purpose, and it includes relief to poor, education, yoga, medical relief, preservation of environment, preservation of monuments, and all these 6 category of purposes the Supreme Court has calling them a per se charity. And the last category, the Supreme Court is calling them GPU, advancement of any other object of general public utility. And this advancement of general public utility has undergone change with effect from 1/4/2009 by adding the following proviso. The proviso 1 was added to this last limb NGO that provided that the advancement of any other object of general public utility shall not be a charitable purpose if it involves carrying of any activity in the nature of trade, commerce, or business, or any activity of rendering any services in relation to any trade, commerce, or business for a cess or fees or for a consideration, irrespective of the nature of use of the application or retention of the income from such activity. So a provision was added to the last limb category NGO, and where the provision, the total provision from the carrying on any activity of the in the nature of trade, commerce, irrespective whether we are using that income for the charitable purposes or not. So there was a complete provision to undertake any activity in the nature of trade, commerce. But the second provision was also added at the same time, which says, provided that the first provision shall not apply if the aggregate value of the receipt from the activities referred to therein is rupees 10 lakh or less in the previous year. So now the first provision completely prohibits the carrying of any business activity, but second provision allows that the business activity can be carried on up to a limit of rupees 10 lakhs. It is in 2009. So this up to 10 lakhs, any activity of business can be carried out without any qualification. And this rupees 10 lakh limit was extended or increased to 25 lakh with effect from 1/4/2012. Now again, there is an amendment from 1/4/16. Now the second proviso, which provides for the time limit, which provides for the monetary limit of the business exemption, which has been replaced. And now the new proviso has been added. First proviso is that such activities undertaken in the course of actual carrying out of such advancement of any other object of public utility. That means the proviso 2 earlier was not distinguishing which business has to be carried on by this GPU category NGO. But now after 1/4/16, the act is very clear. The first, this GPO category NGO cannot engage in any business activity, provided they can undertake any business-like activity which is necessary in the course of actual carrying out of such advancement of other public utility, and the aggregate receipt from such activity or activities during the previous year do not exceed 20% of the total receipt of the trust or institution undertaking such activity or activities during the previous year. So basically, there is amendment in the definition of GPU-like activity from 1/4/2009 up to 12. These entities were eligible to carry on business activity up to a limit of 10 lakhs and 25 lakhs limit. After 1/4/12, after 1/4/16, now the business can be related to the actually carrying out of such advancement of activity, and the aggregate quantum of such business activity cannot be more than 20% of the total receipt of the organization. So this is the framework, or this is the law. This is the section 215 on the GPO category NGOs. Now, what shall be the implication if we are violating section 13(8)? Means if you are having receipts of more than 20% of from the business-like activity, or if you are having business income which is not related to your actually advancement of carrying on such activity, then section 13(8) provides for the consequences if there are business income in violation of section 215. Up to assessment year 2022-23, the section 13(8) was the only section guiding for such violation implication, and it provides the exemption under section 11 and 12 shall not be available if the trust violates the provision of section 215, meaning thereby up to assessment year 2022-23, if we are violating section 215, then as per section 13(8), we are losing the benefit of registration for that particular year on the entire income. That means the entire income of the trust shall be subject to tax without the benefit of section 11 and 12. However, with effect from assessment after the assessment year 22-23, that means from the assessment year 23-24, a new section 1310 and 1311 has been inserted, which we also discussed at the time of our registration mechanism. And now for the assessment year 23-24 and onwards, in the violation of section 215, the entire benefit of registration shall be denied. But at the same time, the income has to be computed in a newly inserted section as per 1310 and 1311. And we have already discussed 1310 and 11 is a special scheme of computing income in case of a specified violation, and those violations also includes violation of section 215. And therefore, when we compute income under section 1310 and 11, the registration benefit on the entire income will not be lost, but the income shall be computed only after allowing allowances made for the revenue expenditure. So from the assessment year 23-24, there is no complete withdrawal, but income has to be computed as per section 1310 and 11. Now the first issue is whether violation of section 215 shall result in cancellation of registration.
No. 215 is a section which results in tax implication even prior to the amendments and after the amendment. After the amendment, as you have already explained, that now under the Income Tax Act itself, there is a mechanism of withdrawing exemptions. So earlier, if the exemptions were withdrawn, there was doubt whether the entire gross amount will become taxable or not. Now the Act itself says that if the conditions of section 12 A, under which the registration has been granted, are not followed, or there are specified violations, so then the income will be computed under section 13, 10 and 11. So 215 will result in taxation under section 13 to 11. That is that for that particular year, you will not be treated as a exempt charitable entity, but it will not result in cancellation of registration.
Manoj, to continue further, whether in such cases, any impact on the ATG approval already granted to the organization?
ATG is a registration which is linked to section 12A. If the section 12AB registration is intact, then ATG will also remain intact. To our understanding, 215 violation doesn't result in cancellation or withdrawal or suspension of 12A registration. Even section 13, 10 and 11 are assessment under the scheme between section 11 to 13. Once you are registered under section 12AB, then you are subject to assessment under section 11 to 13. So even without exemption, the assessment is being made under section 11 to 13. So ATG, what is your opinion, Sureshji?
I have to agree with you. Till 12AB is not affected, the ATG is not affected.
Yes. So
or the conditions for ATG we have not violated. Only
yes.
Because of 215, it should not be
yes.
Any impact on the ATG.
I think so. That is the view we are taking.
Okay. Now we come to the judgment, because now so far we understand what is section 215 and what is the implication if we are violating section 215. Now we're coming to the decision of the landmark ruling on 19th October in the Ahmedabad Urban Development Authority case. Now the issues before the Supreme Court was that the Director General of Income Tax for Exemptions or Commissioner of Income Tax CIT in various states and other office of the Income Tax Department, referred to as the Revenue, have appealed to the decision of various high courts, which have held that the carrying on any trade, commerce or business is not a per se bar or disqualification for a GPU category charitable trust to claim to be and procuring is tax exempt status under the Income Tax Act. So before the Supreme Court, the Revenue was in appeal, and the Revenue was in appeal in the various taking of the various cases. In those cases where the High Court had held that the GPU category, there is no per se bar or disqualification for a GPU to engage in a business-like activity. So against that decision, the Revenue was before the Supreme Court. And again, This judgment, we are calling it a Ahmedabad Development Authority case, but this is not the case of only the Ahmedabad Development Authority case. It is basically a total number of 22 number of cases have been decided by a single judgment. And it includes 32 cases of statutory corporations, 3 cases of statutory regulatory bodies, 1 cases of trade promotion bodies, and 3 cases of non-statutory bodies, and 1 cricket association, and 2 private trusts like normal trust. They are calling it private trust, but it's not a private trust. It's a normal charitable trust we have already associated with. So basically, this judgment, though we are knowing this with the name of Ahmedabad Urban Development Authority case, but this is basically taking into 42 High Court cases, and they have given a consolidated judgment for under this judgment. And again, we have already seen amendment by the Finance Act 23. These 22 statutory corporations mainly dealing with housing boards, where they have to charge, from the resident or from the applicant towards the sale of the flats or the sale of the land. And as because they are engaged in the commercial like activity, they were not subject to 1046 notification benefit, and they were getting benefit of section 215 and 11, 12, 13. So in those cases, even the Supreme Court has held in some cases their receipt may be considered as a commercial receipt. But in the Finance Act 23, already 1046A has been inserted to take care of these statutory bodies who are with the need of housing accommodation, and is a special new section where the commercial activity is also considered as an eligible condition for notification under section 1046A. So by this amendment, this 32 statutory corporations mainly dealing with housing boards, housing needs have been taken care of. So their impact will be nullified by this amendment by 1046A. Now, while dealing with the judgment, the Supreme Court has beautifully analyzed and gave reasonings. And they have said history of legislation should be referred for interpreting like preamble, state of objects, and legislative debate, because Supreme Court has first analyzed section 215 and they have to interpret. And for that interpretation, they think the aid to interpretation is history of legislation is the first they have considered the aid to interpretation. Second, they have considered speeches in Parliament can be looked into as a rationale of the amendment. And department circulars, the para 120 of the judgment provides that the circulars are per se not binding upon court in case where they have to deal with the interpretation of the statutory provisions, but they are at best guide or aid to interpretation for the departmental authorities who are bound to take them into account. So basically, when they analyze section 215, the correct interpretation, they went into the history of legislation, they went into the speeches in Parliament, and they have also gone into the departmental circulars, and they've also gone into the issue whether operational provisions, because section 11.4 and 11.4a allows the business like income as per the operational part of the provision. So they also wanted to analyze whether the 215, which departs an organization to undertake any business activity, is in synergy with 11.4 or 4a, or it override section 11.4 and 11.4a. So all these things they have discussed and analyzed, and on that basis, we can take the summary of key takeaways. And that summary of key takeaways is understanding the meaning of GPO. What is the meaning of GPO? The Supreme Court has said a GPO cannot engage in any activity in the nature of trade, commerce, or business, or any service in relation to such activity for any consideration, including a statutory fees. And this is emphasized in the negative language implied by the main part of the section 215. So the Supreme Court says that at the first part, GPO cannot engage in any business-like activity, including a statutory fees. Now, the Supreme Court says, but however, this prohibition, complete prohibition is relieved to a limited extent by allowing a business-like activity up to ₹10 lakh with effect from 1/4/2009, then 25 lakhs up to 1/4/2012, and again 20% of the total receipt of the previous year with effect from 1/4/16, and with the additional condition that the business-like activity should be connected with the actual carrying out of the GPO activities. So then, as per the understanding of Supreme Court, the GPO cannot engage in business activity, but as per the proviso, they have certain relief to them, and based upon that proviso, they can engage in business-like activity, provided they follow those provisos very carefully. Now, again, they have defined what and when an activity shall be considered to be a business. Here, I think Supreme Court has only gone through the measurement of the profit. And generally the Supreme Court has held that generally the charging of any amounts towards consideration for such an activity, which is on cost basis or nominally above cost, cannot be considered to be a trade, commerce, or business, or any service in relation to thereto. So Supreme Court has held that whenever you're charging something for delivery of a service or a business-like activity, then it will not be considered as business so long as it is on a cost plus basis and you are recovering only a very nominal amount above cost. So basically, up to a reasonable amount of surplus arising from such activity, then those activities shall not be termed as business at all. And if the amount charged is significantly above the cost, then it will deem to be an incidental business to the primary objective. And it will then the separate books of account to be maintained, and you have to have a 20% limit. So basically now the business has been defined on the basis of the markup on the cost. And if it is reasonable, it will not be considered as business. If it is more than reasonable, then that part of business activity shall be deemed to be incidental business to the primary charitable activity, and it will cover under section 11(4)(a), and we have to maintain a separate books of account. And this separate and this high charging business activity should not exceed 20% of the total receipt of the organization. So just to give you the checklist of the applicability of section 215, the step one is we have to confirm whether the activity falls under the last link, any other object of general public utility, and such activity is also covered in the object clause. So until and unless you are covered under GPU activity, this 215 is not applicable to you. Second step is, if yes, we falls under GPU category NGO and our object is, and that category is also covered under the object clause, then the second step is whether it involves any activity in the nature of trade, commerce, and business, or rendering of any services in relation to trade, commerce, or business. If yes, then the third stage is whether the activity in the nature of trade, commerce are undertaken in the course of actual carrying out of such business out of the object. That means if the business is carried on, then we have to see whether that business is linked with our main object or not. If it is not, then the provision of section 215 becomes applicable because it's a non-incidental business activity. At the same time, this non-incidental business activity shall also be subject to section 11(ab)(4), providing for cancellation, specified conditions for cancellation provisions. But in case your business is connected to your charitable objectives, then the fourth stage is we have to find out whether the charges are significantly marked up over the cost. If yes, then it shall be subject to 11(4)(a), and we have to follow, we have to maintain separate set of books of account, and we have to maintain a quantum limit of 20%. And if the total income, if the total receipt from such high markup business activity is more than 20%, then there is a violation of section 215. So this is in nutshell basically the checklist. And once we reach step 1, step 2, step 3, step 4, step 5, then only we know there is actual violation of section 215 or not. And why I'm giving this checklist, because in most of the subsequent judgments after this 19th October judgment, the court has sent back the matter to the assessing officer to know whether, because the assessment were made only that the GPU has been undertaken, the organization is undertaking the business activity without looking at whether that is a significantly markup or whether it is exceeds 20% or not. So until unless all the 5 tests are satisfied, we cannot determine the violation of section 215. Now the key issue, Manoj, whether the quantum of receipt of 20% should be in relation to total receipt of the organization or total receipt of GPU activity of the organization.
If you read the language of the act, but we understand that no exception has been carved for GPU. So it should be the total receipt of the organization. But otherwise it will create a situation where an organization is having 2 status simultaneously, where the per se receipts, the other receipts, and GPU. And the other thing is that even certain portion of an organization falls under GPU, then the organization gets into the GPU category and it is no longer a specialized category institution above the line. That is the first 6 glimpse of institution. What is your understanding on this, Sureshji?
Yeah, actually I also understand the same way, because the word uses the total receipt of the trust and the organization. Okay. The word uses that of the trust and the organization. So I think it should be the total should be of the trust and the organization, not only the GPU part of the activity. Now the second issue comes, Manoj, how to differentiate between casual income and a business-like income for the purpose of Section 215.
Now we have to understand, because these two rulings, actually the crux of these two rulings is that they have related commercial activity, the reference of commercial activity under Section 215 to Section 11(4)(a). There was always a confusion earlier that Section 11(4)(a) probably is an independent business activity, and 215 probably refers to business activity or commercial activity as a part of the primary activity. For example, charging educational institution, charging a certain category of students much higher than the cost and making a lot of profit. That was the understanding. But now these two conjoint reading of these two court ruling suggests that commercial activity has to be assessed under 11(4)(a), even if it is a commercial activity referred to in Section 215 or a commercial activity for other organization falling under 11(4)(a). And once it goes to 11(4)(a), then it takes the nature of business activity. And a casual income, normally we don't treat casual income as a business activity. The CBDT circular in 2008 also says that one-time income, casual income will be treated, will not be treated as business. But the problem is that this Ahmedabad judgment, the Supreme Court has separately observed this aspect also. And at one place of the judgment, the Supreme Court has said that even one-time activities, maybe a trade fair organized by a trade organization, it could be a one-time event. But if it is a substantial event, then such event also will be treated as business-like activity. So therefore, not only that the income should be casual, the quantum will also have the impact. If the quantum is substantial and material quantum, then even a casual or a one-time event will fall under the category of business activity, then 20% for GPU. And then incidentally, not only that it is a business type activity, that business type activity should be incidental to the advancement of the objects. If those two conditions are fulfilled, then you go to Section 11(4)(a), and for GPU 20%, and for the other organization 20% limit does not apply. So this casual income also is not a predetermined conclusion that if it is a one-time activity, an organization cannot treat it as a business. If the amount is material, even casual income will fall under 11(4)(a). If you want to add something,
yes.
Sir?
No. What you said is, I fully agree on this. And the Supreme Court, while dealing with this judgment, though have beautifully analyzed some of the aspect, but not categorically have analyzed some of the operational part. And the second part, which the Supreme Court has not analyzed and which we want to debate and analyze, Manoj, when charges can be said to be significantly above cost to constitute business. Because Supreme Court has said, if the cost is nominal markup, it will not be business. But have not defined when this will be significantly above the cost. And what shall be the meaning of cost. So when the charges can be said to be significantly above cost to constitute a business.
Now there are two things we have to understand. When you say business, a business can also have losses. So business doesn't mean that it will, if it is in the nature of business. So Supreme Court essentially is talking about charges to beneficiaries. When you are charging your own beneficiaries, the beneficiaries working with whom can be treated as advancement. It is not about charges in the normal course of any other business. So when you are charging to beneficiary, the cost to earlier we used to see that overall the organization is making profit or not. And as in Islamic Foundation, Supreme Court had said 6 to 15% of revenue generated over and above cost could be treated as reasonable. I think we can use even the same yardstick, but one has to be careful. It may not be the overall income and expenditure of the organization. It has to be related with the beneficiaries, the cost to the beneficiaries. That is what the court is saying. So earlier organization used to claim that they are having no dominant profit motive by charging capital expenditures. So if an organization has a fee receipt of say 100 crore rupees and they have revenue expenditure of 50 crore rupees and they spend another 50 crore rupees on capital expenditure, they used to claim themselves that they are not making any profit. But that analogy may not work because cost to the beneficiary is to be things. So these are some of the indicators an organization has to establish that reasonably it is not overcharging the beneficiaries.
Okay, thank you, Manoj. Now the next issue is whether cross subsidy is possible after this aspect. Because in some instances the court has observed that in a dharamsala, if you are charging high from some foreign marriage party, then that party of charging shall be business like activity, and it is books of account has to be separately maintained.
Here again there are certain nuances attached to which we should understand. Cross subsidy, earlier Supreme Court decisions which have not been discussed here, it was Islamic Foundation, TMA Pai, PA Inamdar, there were so many decisions in which court said that cross subsidization is perfectly normal in case of charitable educational institution. For example, if you are charging some category of students, maybe NRI students or foreign students, higher fees and subsidizing the cost by charging low to some other category of students, it was a normal, and overall the organization will be treated as a charitable institution without profit motive. But in those cases, the category of beneficiaries remained the same and the constant. The same kind of education was provided. There was no discrimination to the students, irrespective of the high charge. But you took the example of Dharamsala. So in that case, what happens? Not only the charges are higher, but the services are also different. The beneficiaries are also different. So suppose there is a Dharamsala which has 10% of its room, it charges at 5,000 rupees per night, and remaining are 200, 300 rupees. So that 5,000 rupees is an altogether different service, altogether different set of beneficiaries. Therefore, that particular portion should be treated as incidental business activity or business activity, as the case may be. To that extent, Supreme Court decision seems to be correct. But cross subsidization with same kind of services, with same type of beneficiaries, same type of courses, I think still should be possible.
Yes, I agree with you, Manoj, on this. And you have beautifully explained the additional services when we are giving some additional benefit to the beneficiary by charging more, then only that will form part of your incidental business or the main business activity. Now, the key implication basically of this judgment is basically on the business-like activity only. And the first category was the incidental business under section 11(4)(a). The ruling in the case of New Noble Education Society and also in the Supreme Court, in this judgment, the Supreme Court has held that the business can be said to incidental to the attainment of objective of the organization only when it's something related with the main activity or objective of the organization. That means your incidental business has to be related to your main object. For example, selling books to students can be incidental business activity, but the same activity for non-student will not be treated as incidental business activity. That means if the school sells the books to the students which he teaches, then it is an incidental business activity. But if the same school sells books to a non-student, then that part of the activity will not be covered as an incidental business activity also. And at the same time, the court has ruled that the independent business activity, there are a number of judgments which says if the business was undertaken and if the surplus fund is being used to feed the charity, then that business was also explained to be or said to be an incidental business for the purpose of section 11(4)(a). But this court ruling has confirmed that those rulings were not in the correct interpretation of the law. A business cannot said to be incidental only because the surplus from it is applied for charitable purposes. Very high implication of this particular change ruling of this nature. Then the Supreme Court has said the charitable activities in commercial line, like Manoj said, when you are engaged in the education program, you are charging fees. In the hospital, you are charging fees from the patient. So charitable activities are done not in the business-like activity, but in a commercial line. The court says if the amount charged is significantly above cost, it will deem to an incidental business to the primary charitable activity, and separate books of account to be maintained. And for GPU category, the limit is 20%. And the fourth category for the business held in the trust, 11(4). In such cases, the court says the business should be originally settled in a trust, or business should be created out of the original settlers' contribution. They have not considered a situation where after the formation of the trust, after 5 years or 10 years, the business is taken over by the trust and which cannot be sold to be held under trust. So basically, the implication of this judgment is on the incidental business under section 11(4)(a), on an independent business to feed charity, on a charitable activity in commercial line, and on a business held under trust under section 11(4). Now, Manoj, and again, there are another slide I am sharing with you, is the clarification given by Supreme Court on the applicability of this judgment. And this judgment has came on 3rd November 2022. The 19th October was the original judgment, and 3rd November was the on the review petition by the revenue to clarify the implication of this judgment on which year the judgment shall apply. Then the court says, in the para 2, the reference to future application has to be understood in this context, which is for that particular assessment year. That means the court says our judgment is in relation to the assessment year under appeal. But the concerned authorities will apply the law declared in the assessment, having regard to the facts of each assessment year. That means the court says, though they are pronouncing the judgment for the year for which they were called upon to decide, but the law decided by this judgment can be applied based upon the facts of each assessment year. So they have not said that the judgment shall apply prospectively as in the case of the Noble case, but they have said that the department can apply this judgment depending upon the facts of each case and based upon the law declared by this judgment. And now the issue would be whether the judgments, whether early assessment can be reopened on 154, 147 or 263 or not. So now the issue, Manoj, is what are the different type of business or businesses like activities being run by the NGO, and which type of business are hit by section 215?
Now, as you have already explained, that Supreme Court has elaborately discussed the meaning of the word incidental. This elaborate discussion on the specific meaning of the word incidental did not happen in the past. In the past, in the cases, maybe this Gujarat Maritime Thanti Trust, the idea was that if a business is feeding a charity, if the income from a business is available for charitable purposes, then such businesses should be held as incidental business. Supreme Court said that that broad liberal interpretation of the word incidental was incorrect. 2, the act itself, the language of the act changed from 2016 onwards, and therefore a liberal view of the term incidental can no longer be taken. So, and as you said that if a school is selling books to a student, it is incidental business. The same book, if it is selling to outside people, it is a non-incidental business. An educational institution doing seminars for its students, it is an incidental business. But an educational institution doing seminars for outside MDP programs, small workshops, etc., for outside clients which are not its beneficiary, it is a non-incidental business. So now, therefore, whether something is business or not, that we said casual business, regular business, Supreme Court said that if substantial amount are being generated, even casual nature business will be treated as incidental business and it will be subjected to the 20% limit for GPO organization. For example, a trade organization doing a trade fair once in a year, but that is its main activity. The organization cannot do it unless it is below 20% of its total receipt. So now NGOs, one, even if it is a business, even the entire amount of the business is being rotated back to charitable purposes, it will not be allowed as an incidental business unless there is a nexus of the business to the beneficiaries of the organization, nexus of the business or the need of the business for advancement of the objects of the organization. So the main window of business still left is that all corpus businesses which were given by the author of the organization as a property of trust. There also Supreme Court has said that organization cannot invest in businesses. If the organization at the formation of the trust has received businesses, then those businesses can be kept and they will not be hit by 215. Businesses which are incidental, they will not be hit by 215, up to 20% in case of GPU, more than 20% in other case. But in other cases, educational, relief to poor, other organization, if they are having business activity which is 30%, 40%, 50%, then 215 will not be attracted, but their genuineness as a charitable organization can be questioned by the commissioner, because if they are prominently doing business activity, then again that business will be under a problem. So that 20% limit, if it is not applicable to other NGOs, that doesn't mean that they are entitled to have 70, 80, 90% as business activity. They should not be doing dominantly business activity. So these are some of the thoughts. Have I missed anything, Sureshji?
Thank you, Manojji, for your nicely summing up the various type of business activity and where the 215 is lying. And you have said, and you are using the term charge to beneficiaries. Now, in this context, whether the NGO can engage in consulting services, because in most of the cases, the consulting services are without the beneficiaries. They are just to generate the revenues.
That this particular thing is a matter of concern. If the more we read the judgment of Ahmedabad as well as the novel, it seems that consultancy services to outside agencies, outside parties who the services itself does not result in advancement of the objects, then such services cannot be done. I am afraid this is what we are interpreting out of this judgment. They may have to create another organization, maybe another Section 8 company which does not take 12 AB benefits, and maybe organizations should plan, and it is already high time, and they should shift all those kind of activities which are commercial in nature and which are not related with the beneficiary. This should be taken out of the organization.
Yes, right, Manojji. Now, the third issue and last issue is whether the charitable activity in commercial line for per se charities may also fall under incidental business if the charges are significantly higher, as per the ratio of judgment for GPU category NGO.
As we said, suppose an organization, an educational organization is having certain educational activity where the charges are high. So in the light of even the earlier judgment, and even if we say that cross subsidization is allowed, even then that particular portion where the charges are high, it will be deemed as a business activity and it should be computed under incidental business activity under Section 11(4)(a). So in that sense, my understanding is that commercial activity can no longer be computed as advancement of objectives, and they have to be computed under 11(4)(a), and their quantum should be reasonable. They should be related with the beneficiaries.
Thank you, Manoj ji. So this brings to the end of our first discussion on the judgment of the Ahmedabad Urban Development Authority. Can I take up briefly the other judgment as well so that we can take up the question answer together?
I think so.
I think we should do that, na?
Yes, sir.
So, sure. So the second judgment is the Supreme Court judgment on the New Noble Education Society. And like this, Section 215 was in relation to the purpose, definition of charitable purpose, but this judgment is in relation to educational institutions which are claiming exemption under Section 1023C6. So what are the key issues of this judgment? This judgment has reaffirmed the meaning of the term education. The education was defined in the with the decision of Lok Shiksha Trust decision by Supreme Court 1975, and it says the sense in which education has been used in Section 215 is the instruction, schooling, or training given to the young in preparation for work of the life. Education has not been used in that wide and extended sense, according to which every acquisition or further knowledge constitutes education. What education connotes in that clause is the process of training and developing of the knowledge, skill, mind, and character of students by formal schooling. So, the Lok Shiksha judgment focuses on the formal schooling being called only the education. This noble judgment has also reaffirmed the decision of the Lok Shiksha Trust and says formal schooling shall be the purpose of education shall be the formal education, formal schooling only. Now, second decision is they have analyzed the word solely, and they have said solely means exclusively, means the basic provision granting exemption enjoys that the institution should exist solely for education purpose and not for the purpose of profit. The solely means exclusively and not primarily. The synonyms for solely are alone, independently, single-handedly, singly, unaided, and exclusively. And the Supreme Court has analyzed the various meanings of the term solely, and then they said the solely is then not the same as predominant and mainly. The term solely means to the exclusion of all others. So all the decisions where the predominant object was the principles on the basis of which the solely was defined, the Supreme Court judgment in the Noble case, they have said solely is not the same as predominant, and solely means exclusion of all others. And therefore, solely educations can no longer engage in any other charitable or non-educational business activity. The third judgment, the third ratio of judgment is the object of solely education institution should be specifically related to education. So first they have said what is education, then they have said solely means only education, and third they says even the object of that organization should only relate to the education. The organization having approval under Section 1023(6) cannot have any object other than one related to the education. And this is confirmed by Para 76A, which says the organization having gone for the approval, the CIT has to examine whether all the object clause are only in relation to the education, no other objects are in the object clause of the organization. So the key issue, Manoj, what is the impact of this ruling on the definition of education under the sole trustee Shiksha Trust for whether the charitable institution run only for the formal education program or can they run short-term education courses?
Now, Sole Shiksha Niketan case was in case of Section 1022, which is analogous to Section 1023C. So our normal understanding was that it will have a different implication for organization registered under Section 12A. But what we understand after these two rulings, the court more or less is saying that in India, the education means running formal courses which go on to result in some kind of a certificate or a degree by a recognized institution. Or it could be a university. A certificate degree through a recognized institution, there are case laws that even a music degree given in a traditional gharana also could be treated as a educational course. But I think short-term courses, MDP, etc., management development program, etc., will not be treated as education as we see Lok Shiksha and the ruling of Noble case.
Thank you, Manoj. Now, on the incidental business activity, the noble judgment has said, which we have already touched upon at the time of the Ahmedabad judgment, that seventh provision to section 1023(6) alludes to business and profits. And it allows if the business is incidental to its objective and if the separate set of books account is maintained. The interpretation of section 1023 says, therefore, the trust of education institution must solely exist for the objective process, that in this case, education or education activity, and not for the purpose of profit. But the seventh provision, however, carves an exception to this rule and permits an trust institution to record or to earn some income, provided the business, which has to be read to as education or education activity and nothing other than education. So that means, though the seventh provision allows the trust to carry on some business-like activity, but that activity must be in relation to the carrying on the education and the education activity only. And it also said, where institution provides their premises on infrastructure to other entities, for the purpose of conducting workshop, seminar, or even education program, which the concerned trust is not actually imparting, and outsiders are permitted to enroll in such seminars and workshop courses, etc., then the income derived from such activity cannot be characterized as a part of education or incidental to the imparting education. So the noble judgment has taken a very, very stricter and limited interpretation of the term incidental, and they are saying the incidental business activity has to be in relation to education and only also has to be in relation to the students which they process and not to other students as well. And the last issue of this judgment is that the CIT, the power of CIT at the time of granting approval, in the case of a granting approval for an existing organization, the commissioner has the power to examine the books of account to verify the nature of income earned and whether it is for the education or education-related objectives. And the CIT has also power to check whether the compliances of other state laws have been made or not by that concerned organization before granting the approval. So Manojji, now at the time of approving the provisional registration to normal registration for 5 years, whether the CIT can check the books of account and by following this ratio of judgment?
Yes, this judgment has totally reversed the earlier position. Earlier, courts have held that the books of account was an assessment issue. But now the Supreme Court is saying that at the time of registration, it is well within the powers of the CIT to go into the books of account to ensure genuineness. So the books of account is an integral thing required to ensure genuineness. So I think that CIT does have power to ask for books of account at the time of conversion of provisional to normal registration, or if in the new scheme when an organization directly applies for regular registration.
Thank you, Manojji. Now, Tarunji, over to you.
Sir, thank you so much. Now we shall take up the queries. Sir, in the rulings, we have discussed about the business-related income, but I could see in the comment section, there is a lot of confusion considering that rental income is the most common income which generally Dharamshala received, or certain events are being done by the educational institutions, or premises is being let out to conduct the examinations. So what will be the fate of these incomes, rental income by a religious trust or Dharamshala, or the event income being received by the school or educational institution? In which category particularly they will fall, and whether that will be considered as the breach of that limit of 11(4)(a) and 215?
But we understand that one rental income is not necessarily business income. It is income from trust property. But a trust property created to earn rent also is not permissible, because then you are getting into the business of renting out properties. So if an organization is having certain trust property and it is earning income from trust property, those particularly rental income, Dharamsala would be not the exact appropriate example, because Dharamsala's primary activity is to give, provide accommodation and shelter to people. And when the charge, if the charge is higher, then only it becomes a commercial activity. Otherwise, Dharamsala itself is a charitable activity. Collecting rent itself is a charitable activity, so it should not affect. Only when it comes to high charges, then only it becomes a business activity. That part we have already discussed. But if it is income from property of trust, then incidental business issues will not arise. There is one decision from Hyderabad Tribunal after the Supreme Court ruling, in that it was held that surplus infrastructure, which is dominantly used for charitable purposes, a portion of it is, if it is rented out and rent is earned out of it, it will not affect the charitable character and it will not go under 11(4)(a). It will be a permissible activity. So this judgment has created a lot of confusion, but to keep it simple, what can be justified as income from trust property, that should be permissible. Deliberately creating trust property to earn money, that will not be permissible. Incidental business has to be incidental. Any business cannot be treated as incidental only because its income is being used for charitable purposes. These are the 3-4 things which are coming out of it.
Sir, many people are confused, like what falls under the category of general public utility under the 215. So if you could give the principles or examples that what will fall into the category of advancement of any other object of general public utility.
So the advancement of any other public utility is the residual category. So therefore, we don't have a definition or an inclusive list of activities to be covered. So it is all other activities. So once you understand that anything which is not falling under the first 6 links related to poor or education or environment or monuments, heritage, education, so yoga, so it is a residual category, and the residual category is very broad. It is very broad, and in our book also we have covered that in the past even stock exchanges were treated as charitable institutions, trade associations were treated as charitable institutions. So anything which has a larger economic purpose, it is not necessary that it should help the poor people. It may help the nation, it may help the environment, it may be a research activity, it may have a long-term benefit to the society at large. The bottom line is that it should be conducted without profit motive. So it is a residual clause. I'm afraid we cannot have a definition for that. We can, if somebody gives an activity, we can try to say whether it will fall under GPU or not.
Just to add here, this classification under which limb your activity falls is going to be a very, very tedious job, because in the new form 10B, the auditor has to certify how much expenditure under each limb, and each limb is not defined under Income Tax Act. And one has to go for the judicial pronouncements, and it will be subjective. And I think it is going to be a mess. Which activity falls under which limb is going to be a very, very tricky situation.
Sir, sale of cow dung by the Gaushala, whether it will be a incidental business or it will be a main charitable activity part.
Cow dung by Gaushala, in the past it has been held that it is not a business at all. But if the cow dung is generating sufficient profit and it is done as a business activity, then it can be treated under 11(4)(a), but it is a legitimate business activity. I don't think there will be any issue on that.
Sir, that 20% capital, 20% cap on the limit will be on which receipts? I think already been discussed in the webinar. If you can just summarize it for me.
If in case, let us take an example of Gaushala, the 20% will be suppose from cow dung and other milk and other sale. The Gaushala is generating 1 crore rupees, and overall donations and all kinds of receipts together has to be more than 5 crore rupees. It will include all kinds of receipts which are treated as income under section 11(1).
Sir, the noble educational ruling, which is applicable to that solely educational institutions, whether the similar ratio can be drawn for the hospitals charging a higher amount of fee from the patients.
The hospital charging higher amount of fees from the patient may render their 1023C or 12A registration in jeopardy. So because the Supreme Court has said that once you are charging your beneficiary, unless the quantum is not very high, that particular portion will be treated as a commercial activity. So in general, if the hospital is charging high, it is going to lose its approval under 1023C or 12AB. If the hospital has separate books of account and record and a particular section of its patient it is charging very high for particular kind, then maybe it can claim it to be an incidental business activity, but that should not be dominantly high, even though 20% will not apply. If it is dominantly high, then the question is that whether it is a genuine charitable organization.
Just to add here, in a recent judgment on the hospital, a hospital running as a profit-making body was converted to Section 8 company. And that Section 8 company went for the registration. And during the registration, the CIT exemption has compared the rates, the charge to the patient at the time when it was a profit-making body, and the rates charged at the time of Section 8 company. And the rates were no same. There is no change, no lesser rate. Then the CIT exemption said, the charge becomes the same when you are in the profit-making body. So there is no change in the nature of the organization, and they have not granted the registration. So I think in such cases, by the ratio, following the ratio of this assessment, the hospital must demonstrate how their charges are lower than the profit-making institution charges.
Sir, there are many queries on the registration-related issues. So to summarize all those queries, what they want to people ask. So if I summarize the registration provisions for them, so they are confused between the provisional and regular registration. So just I'll summarize for them, then I'll ask a query from you. So basically the registration scheme of registration as it stands as of today. So any trust which is applying for the first time, it has to apply for the provisional registration first. Then it has to convert its provisional registration into regular registration within 6 months of commencement of activity. These provisions are applicable as of today, but with effect from 1st of October 23, your registration application will be dependent upon the fact that whether your activities are commenced or not. If your activities are not commenced, you have to apply for the provisional registration. If your activities have been commenced, you can apply directly for the regular registration. So these are the provisions which are applicable from the 1st of October 23. Now, what is the commencement of activity? It is, in our view, it is basically applying money towards your charitable objects. So now many people are confused. In the order granted in Form 10AC, nowhere it is mentioned that provisional registration has to be converted into 6 months to the regular registration, and many people have missed those deadlines. And some people have mistakenly applied in the wrong code. So they have been granted provisional registration instead of regular registration. And many people have missed the deadline to apply for the re-registration, which were they supposed to get for the 5 years. Now, what will be the fate of all those mistakes or the deadlines are missed?
The one thing is that 6-month limit from the date of provisional registration. The department is taking a view that all existing organizations should have applied within 6 months of issue of provisional registration. In our opinion, that is an incorrect view, because the organization had already commenced the activity, and this fact was known to the department. And this was a kind of a irregularity in the act itself, which has been corrected in 2023. So to our understanding, an income tax department should not deny the renewal application, the regular registration application of a provisional registration, even after 6 months in case of existing organization. But throughout the country, to the extent we came to know, is that the department is rejecting. So you apply, you get rejection. Maybe already people are trying to go to the courts for a writ petition. If you go to the court of law, in my opinion, there is a very strong chance of getting relief. We also understand that most probably CBDT also may grant some relief to those organizations which did not apply within 6 months, 2 who forgot to apply for renewal itself within 25th of November. But these are speculations. Apart from it, we don't have a legally viable option available.
And how they will handle the issue of accreted tax, which has been levied on such institutions which have missed the deadline to re-register or to file an application for conversion. So what will be the fate of all those institutions with respect to accredited tax?
All organizations should apply for provisional registration first, so that at least they are in the day they get a notice for 115 TD, they are in a position to litigate it in the light of provisional registration, that a registered status and a cancelled status both cannot coexist. So otherwise they are going to receive notices. Sureshji, what you would like to add?
In such cases, I also advise them to file a controversial petition with the severity under section 119(2)(b), because this controversial power is not given to the CIT exemption, but this power remains within the stated book. So I think to take care of this 115 TD missions, I think they should also go for the controversial petition with the severity, so that they can say their proceedings have not been completed.
Sir, someone has copied all the conditions which are mentioned in the order of provisional approval, and it says that nowhere it is mentioned that provisional approval or registration has to be converted within 6 months. But that there was a circular which was circular number, I think 11 of 2022, which was introduced on 3rd June. It has already substituted all those conditions, and you can check that circular. In that circular, the substituted condition says that provisional registration has to be converted into the regular registration within the 6 months of commencement of activities. So I think, sir, there are many queries which are not related to today's session, but which are related to somehow Form 10B, 10BBI, Tier 7 statement of donations and anonymous donations. But friends, it will not be possible to take up all those queries because we do have a time constraint and we have already crossed the time limits. But after reading all those queries, I can assure you that most of these issues, even the 99% of these issues, are covered in our book, which you can refer, which is 4th edition of Book of Trust and NGOs Ready Reckoner, which is duly amended by the Finance Act 23. You can refer and you will find answer to all these queries in that particular book. And I think we should conclude for today's session since we have already crossed the time limit. So I would like to extend my sincere gratitude for your active participation in webinar on the Charitable Trust, Finance Act 23 amendments and Supreme Court rulings, and kind of engagement I could see. I think that has made it insightful session. And I hope this webinar has provided you the comprehensive understanding of the amendments and the legal perspective surrounding it. And the kind of amendments being brought in the recent past, this subject requires the constant attention and constant regular updation, even for the NGOs and all the tax professionals. And I would also like to thank the Fogla sir and Kejriwal sir for their continued support and guidance throughout the country on this subject. So thank you, everyone. So I think we should conclude for today's session.
Yeah, thank you.
Thank you, Tarun.